So overall, good job by the bulls getting a rally into the close. Type bull channel well, let me start with the daily chart. We had a type bull channel on the daily chart, and that increases the probability that the current sell-off we're getting, the sell-off from over here last week, it was strong enough for a second leg down. We're getting the second leg down right here. And I thought that this second leg down was likely to find buyers. And we had an outside bar, and it was getting big. And the bigger it was getting, the more climactic it was getting. And whenever you're testing important support on a higher time frame, you just don't know how many traders are on the sideline waiting to buy. And that's exactly what ended up happening. So you had traders buying. They bought below the May 20th low right here, scaling in lower. And we tested back down in this stop order over here, and we found buyers. 5-minute chart. Obviously, we had a strong sell-off, and we ended up getting basically a spot. You can call it a parabolic wedge, but this channel's too tight. And then I thought the odds were we'd go sideways more here, and instead we broke strongly to the downside. That traps traders on the wrong side of the market, and that led to a second leg down to the 39 low. First bar of the day, we ended up gapping up on the open, and I thought it was a gap up, large enough gap, we may get a small second leg. I think one of the problems the bulls have is it's reasonable to think that there's going to be sellers probably not far above the high of this bar. Why is that? Because the reality is you have traders who will probably be interested in selling the high of yesterday. Why? Because it's a weak stop order buy following Friday's strong bear breakout. And because of that, odds are we'll likely get some kind of second leg down. So not a great location for the bulls to be buying. All right, there we go. Doji on bar one, strong enough gap up that the odds favor buyers below bar one and at least some kind of second leg. Then we got bar two. Bar two, it's a bull breakout above bar one. But realistically, I suspect the upside is, at this point, probably limited. And we'll probably go at least a little bit higher and probably break out above yesterday's high. But Doji on bar one, probably more of a trading range open and not a trend from the open bull trend. Now we have 3 consecutive bull bars. Good for the bulls. What are the chances we go a lot higher? I doubt we're going to go significantly higher. But 3 consecutive bull bars, probably the first reversal down is going to be minor. And then there we go. Bar 4. Now we have 4 consecutive bull bars breaking out above yesterday's high. But a buy climax 3, bigger buy climax 4. What about buying below 5? 5 is a little bit too strong, big reversal down. And like I said, there's probably sellers above yesterday's high. So it's a little bit dangerous. Bar 5, the bear bar is a strong enough bar. Odds are we'll get some kind of second leg down. 6, we have consecutive bear bars, 5 and 6. That's probably a strong enough reversal that the first reversal up is probably going to be minor and lead to sellers above. 7, now we have 3 consecutive bear bars, body's getting smaller, but I suspect sellers above the 7 high. 8, we have an inside bar, not great for the bears, probably going to go at least a little bit lower. And therefore, even if we do have to pull back first and go above the 7 high or the 8 high, or even test back to the bar 5 breakout point low, I still think there's sellers in that general location. And then 9, we have a strong bear bar. That's a strong enough breakout and a strong enough give up bar that we're probably going to get some kind of second leg down. And follow through consecutive bear bars, 9 and 10, good for the bears. Increase the odds that the first reversal up is going to be minor. 11, we have a strong bull bar. What about buying above it? Some traders will, but realistically, as far as buying after bars 9 and 10, The first reversal up is probably going to be minor, but it's a strong enough bar that we may get a second leg up. One of the problems for the bears is that bar 11 is a relatively large bar. It's an outside bar compared to 10, and it's just under the moving average. So it's really not a great location for the bulls to be buying. 12, bear bar, probably buyers below and at least a second leg up. And then 13, we have a doji. That might be all the second leg that we get. The bulls who bought the 11 closed, disappointed with 12. Some will use 13 to try to get out, break even back at the 11 close. 13 is a high one buy, but really, I think a dangerous location. The sell off to 10 is fairly strong, and anyone who bought above yesterday's high or bought on the open with bars 2, 3, and 4, or bought below 4, they're trapped, and therefore there's an increased risk that we may get a second leg down. 14, we have a bear inside bar, probably sellers not far above. What about buyers below? There might be buyers below. We have a low one short on 12 after a strong breakout, 9 and 10. Typically low ones, they lead to pullbacks before they get attempts at trend resumption. We had a pullback on 13. Inside bar 14, we still may get resumption down. So I'm not confident that we're going to go a lot higher before we end up testing back down to the close of bar 10 or the low of bar 10. Then we got a surprise on 15. Strong enough bar, we'll probably go at least a little bit lower. 16, now I have consecutive bear bars, 15 and 16. That's a strong enough breakout. That whatever reversal up we get is probably going to be minor, but it's climactic. And therefore, just like traders took profits after 9 and 10, 15 and 16 increase the chances of profit taking in a pullback. And then 17, we got a bull bar closing on its high. That's a strong enough bull bar that I think the odds are we're going to get at least some kind of second leg. Maybe 30% chance it's the low of the day. But if we start to get a series of bull bars closing on their highs, traders will begin to wonder if the low of the day is in. More likely, we'll have to go sideways, best case for the bulls. But if you're a bull, you might buy it and hold, taking a chance it's the low of the day. Consecutive bull bars. Let me fix the hard to read the numbers. There we go. Consecutive bull bars, 17, 18. Strong enough that I suspect the first reversal down is going to be minor. One of the problems is even if we have a bear bar 19, we have a tail on 18. The market rallied and then it pulled back on 18 and it rallied again on 18 and 19. And now 19 is reversing down. That's a two-legged pullback on a smaller time frame after a strong breakout 15 and 16. That increases the risk that we may end up going, while we may get a second leg up, there might be sellers not far above the 19 high. We found buyers below 19, testing the breakout point 17. Bulls, breakout pullback, buy set up. Good bar for the bulls on 20. But as far as buying it, some bulls will. But if we start to hesitate after bar 20, that would increase the risk that we may end up finding sellers not far above the 20 high. By the way, I'm using the left and right on my keypad, and I keep hitting up and down accidentally. That's why I keep zooming in and zooming out. Doji 24, second entry sell for the bears. You can see what happens. Some bears sold below 19, selling more above 19, and then we're testing back to the 19 low on bar 21. It's a second entry sell, not a great signal bar 24, but 15 and 16 are strong enough that the odds favor some kind of second leg down. And then 22, we have a bear bar 21, followed through 22. That increases the odds that we'll probably get at least a small second leg down. And we may end up having to test it down to the low of the day. I did it again. And then 23, bear bar closing on its low. Now we have three pushes down. First push being 10, second push being the 17 low. Third push being 23. What about buying right here? Where you're buying on strength, you're buying a bear bar 22 and a stronger bear bar 23. And part of my concern right here is that you're buying an overall look. One, we may have to pull back. We may have to sell off lower. When we sold off from here to here, we may have to go several points lower before we find buyers. And 24, another bear bar, but body's getting bigger. What about buying? What about selling the close? Well, you can. It's definitely climactic, so we may end up having to pull back. So it's probably better to wait and see what the pullback looks like. But you can see 25, 26, 27. That's really not what you want to see if you're hoping for. It's really not what you want to see if you're hoping for some sort of strong. It's really not what you want to see if you're hoping for some sort of strong reversal up. And then 28 inside bar, not a great buy for the bulls. Looks like we may just go sideways here. 29 outside down. Tough to sell, forcing bears to sell far from the moving average, but strong bear breakout. 22, 23, 24. And it's probably not the world's worst sell. You sell below 29. The outside bar stops above 29, taking a chance that this is going to lead to a second leg down. And then decent follow through 30. Good for the bears, probably going at least a little bit lower. Bears that are short, worst case, they get out above a bull bar, closing on its high. And you can see what happened. We're not getting bull bars closing on their highs. Do they get out above 31? I think it's reasonable, but it never triggered. What about 32? 32 is the second leg down after 31. If 33 is a bull bar closing on its high, bears get out. Aggressive bulls might buy. And you can see what happened. Instead of forming a strong bull bar, the bears formed a doji. And then 34, bear bar, another sell climax. Good for the bears. What about selling the close? I think it's a tough bar to sell the close. It's a climactic bear bar. 3 legs down. 1, 2, 3. 1, 2, 3. So 3 legs. 1, 2, 3. 17, 25, 34. Nested with 3 smaller legs. 30, 32, 34. It's still fairly tight, and that lowers the probability that we're going to immediately reverse up. But with a bull bar 35, I think it's reasonable for the bears to exit above 35. Too much risk that we may end up going mostly sideways here, and that we may end up reversing. 36, doji, not a great low one short, probably buyers below. We formed an outside bar 37, and we went outside up, but we closed as a doji. That's a little bit disappointing for the bulls. Bulls who bought above 35, hoping for a strong entry bar 36, disappointed 37, increased the risk to go more sideways. For the bulls, they have 2 choices. They can get out below 35, or they can use the wide stop, scale in. Strong surprise, 39, but who's left to sell down here? We have another big bear bar. Is this going to reset the count? Probably not. At this point, you're at 72, you're 7,250. That's all the way down here at this red line from earlier today. Probably more of a support level, and this may be a sell vacuum testing support. I still think the bulls who bought the 35 high and bought more lower probably will make money. And then 39, bull bar closing on its high, good for the bulls. Probably going to get at least a couple of legs sideways to up in the test of the 35 high. 40, we have a bull bar, doji, not a great buy, probably buyers below. And then 41, we have a low one short. I still think as far as selling the low one, and selling low ones late in bear trends typically lead to pullbacks that are really not ideal. And then obviously we got the strong reversal up 42, 43. I thought that was a strong enough surprise in an overall climactic sell-up. The odds favored a second leg up, and we have obvious magnets above. We have the low of last week. We have the 17, the bar 17 low, bar 17 high, 7,400. So I thought that this was a reasonable location for bulls to buy, betting on a second leg. They can wait and see what the breakout above the moving average looks like. They can wait and see what any reversal attempt looks like and look to buy it. Bears, they got a doji, 44. Not a great sell, probably buyers below. And then 45 outside up. Probably going to go at least a little bit higher. And then the bulls started to get a series of bull bars. What about selling? The channel is far too tight to be selling. And that increases the risk that we're going to get some kind of second leg. And you can see, even with 51 appears, it's a climactic, basically a bull break out of a bull channel. So 75% change, you test the bottom of the channel. But if you think about 50, I said 55, I meant 51. But if you think about bar 51, where's the bottom of the channel? Well, it's basically these lows down here. So even if we pull back on 52, like we did, you're already at the bottom of the channel. And that makes it a low probability sell on the close of 52. More likely, there's buyers. And then we ended up just continuing to go sideways. We broke above the low last week. But at this point, the channel is so tight, whatever reversal down we get is probably going to be minor. Consecutive bull bars, 58, 59, good for the bulls. Probably buyers below in a second leg up. Doji, 60. We may get a small second leg up after 58, 59. And then we may have to go sideways more, but this channel is just too tight for traders to be selling it. And then 61, 62, small bars, pausing, pulling back on 63. But 63 is similar to 52. There's probably buyers not far below it. And then 64, bull bar, probably going to go mostly sideways. I think we'll still get a second leg up and test above the 17 high. We got really close to it, but we didn't quite get there. Then we also got close to the 21 high as well. Bear bar on 68, closing on its low. I think it's probably okay to get out of longs at that point. And with 3 consecutive bear bars, 69, 70, probably the first reversal up is going to be minor. But 3 consecutive bear bars against the bull rally, odds are is probably a leg in a trading range, and therefore the downside is limited. It's always possible we get a collapse, but it's low probability. Doji, that's a warning. We're probably not going a lot lower. 72 consecutive bull bars, 71, 72, but the sell-off down to with 69 and 70 is probably strong enough for a second leg, so probably sellers somewhere above. Then we got the Doji, 73, not a great buy above, probably sellers, and then we formed a low one short 74. We'll probably fall below 71, but a low one shortest moving average in a fairly bullish rally, probably buyers not far below. And then we got the Doji 75. That's a weak entry bar for the bears looking to sell below the low one, 74. So you'll have bulls buying. 76, we tried to break the downside and instead found buyers, and then the market reversed up strongly. 77. Why did 77 happen? We had a lot of traders who bought up here, and then they saw the sell-off, and they wanted to see what the second leg down looked like. And then when they see the market go sideways, what are they going to do? They're going to buy. You have other traders who are flat. They see the sell-off expecting a second leg. And when they sell, betting on the second leg, they're disappointed, and they start buying back their shorts. And then you have other traders expecting a test back up here, whether or not they're long. Once the market starts to stall, they start buying, and that's what leads to reversal up. Good bar, but too late in the day. Then we rallied for 2 bars and went pretty much sideways. For stop orders, always in. You could buy above 3, but not high probability. Those traders, bulls get out below 5 or below 6. I think it's reasonable to get out below 5. Bears can sell below 5, they can sell below 6, they can sell below 8. And at that point, do they get out above 11? They can, but if they do, they probably get out. They probably sell again, maybe below 14, or as 15 is breaking below 11 or on the low of 15. And then if they're short, I think it's okay to get out of longs above. I think it's okay to get out of shorts above 17. Bulls can buy. Bulls, if they buy, they get out below 21 or 22. Bears can sell below 22, or they can sell 23. And 24, if they're still short, they can get out above 26. I think it's tough to buy above 26. Bears, they can sell again below 29. Bulls have to get out if they are long. 30, follow through, good for the Bears. Probably going to get a second leg down. And then no reason for the Bears to get out or the Bulls to buy. 35, I think it's good for the Bulls. Bulls can buy, but then it went sideways, and you had 1 or 2 choices. Either get out below the 35 low, assuming you didn't get out in here, you get out below 35, or use the really wide stop and scale in. Most traders should get out below 35 and then buy again above the 39 high. Bulls, they can buy 39, betting on a second leg up. And then the Bulls, they're long. And where do they get out? I think they definitely get out below 68. Bears can sell, but downside is limited. And bears, if they're short, they probably get out above 75 or 76 for sure. And it's probably okay to get out above 72 or 73. Not a great sell below 74. But if you do sell below 74, you got to get out above 75 or 76. For limit orders, I thought probably sellers above the low one, but it never triggered. And then I thought buyers below 19 or on the test of the breakout point, 17, but probably sellers not far above the 19 high. And we may end up going sideways, and then arguably sellers above here. And I thought buyers below 36, and I thought buyers realistically below 35. So if anything, 38, if you see it, it's a buy. Better to wait for the reversal up 39.40 and buy the pullback on 41. And I thought buyers below 44. And really, any of these pullbacks are buys. probably sellers around 7,400 and the 21 high. And I thought sellers above 71 or 72 for a second leg down. I thought buyers below the 71 low and 74 during 75 or 76. Buy the close, sell the close. Probably sell the close on bar 9 and 10. But odds are you're going to get a pullback first. Sell the close 15, even sell the close 16, especially if you can use the wide stop to scale in. If you're selling 16, it's probably better to scale in higher. In not great area to sell 16. Really, it's better to just sell the pullback at that point. Probably sell the close 23, 24. It's arguably sell the close, but same problem as 16. Probably better to wait for the pullback and then sell below a bear bar, such as bar 29. And then 30, arguably sell the close. 31, you can really sell the close. And through here, I thought it's becoming increasingly difficult to sell closes. Every time we get a bear bar, we pull back, bear bar, pull back, bear bar, pull back. Big bear bar, pulling back, not ideal. Buy the close, I thought 42, 43, probably okay by the close. And all through here, buy the close. When it starts to form a channel, it's really better to buy pullbacks. And then when you see 66, 60, when you see 69 and 70, it's probably more of a sell the pullback for a second leg down rather than sell the close. And then here, I would not do anything. Let me take a look at questions. Okay, question. Brad, are big second entry bars better than small second entry bars? And by the way, whenever you ask a question, please give a bar number reference. It makes it easier. So thank you for giving a bar number. This bar, because usually you're thinking about a bar when you ask those kind of questions. Okay, so back to the question, does bar 42 give you discomfort? Does this bar give you discomfort? Or second entries that are a lot higher, like bar 20? Okay, I see what the question's asking. So basically, how do you discern? The person says often get confused between buying too high and second entries that are at a worse price equals a good signal bar. Could you help me to differentiate? Yeah, so basically what they're trying to better understand is how do you know that a bar like 22, even though the bar is smaller and allowing you to buy at a better price, how do you know that that's a bad buy, 22, as opposed to 42? Well, at the time, when you look at 22, you don't really know that it's all that bad of a buy. The only difference, the reasonable argument is that 22 is an outside up bar still early on. We had a strong 15, 16 was a strong enough surprise. We'll likely get a second leg down. And, this is really not all that great of a location for traders to buy. There might be sellers around the 16 high. And then when you get this bar, 21, the market's stalling, that's reasonable for bears to start exiting. Here, it's different. At this point, 22 is all the way over here, and we've sold off tremendously. And I made the comment about the 15-minute moving average. I made the comment that I thought that this was not a good sell-off, and then we got this big surprise right here. It's a worse sell-off, and that's 1030 down here. And I said it's really tough to want to sell any of this. And then it starts getting even more climactic, and at some point, the market's so climactic down here, and the moving average on the 15-minute chart is at 73.60, that when the market's over here at 72.80, it's realistic to assume that the market's going to start to rally all the way back to the low of last week and the 15-minute moving average, which means the 5-minute moving average down here may not act as resistance. It did for a bar or two, but when you see 42 and then you see 43 follow through late in a trend, and especially when you're at support on higher time frames, pretty reasonable to assume you're going to get a second leg up. Okay, why was your target the high of 17? Whenever you have stop orders in channels, especially if they're good looking stop orders and they're reasonable stop orders, usually the market will retest it. Once the market starts to form strong support on a higher time frame and you start to get this, you're going to start to wonder about the possibility of what happens to those bulls who bought the low last week above 17 and they just buy 100 points lower above a bull bar. What's going to happen to them? Most of the time, especially when you're buying in a higher time frame, especially if you're buying in the direction of a higher time frame trend, if this sell-off is a pullback on a higher time frame trend, the odds are much higher that a trader buying and buying more lower is going to make money. And that's why I was not all that eager to be selling down here. That's in part why I thought that would get retested. It's the same logic here. We have a bull bar 35. If you buy it and scale in, odds are really high. You're going to get back to the 35 high. But, this was already so climactic for the bears. I thought the odds were high we would get all the way. I thought the odds were reasonable that we'd at least attempt to get back up to this location. And when the market started to form a really tight bull channel, I started becoming more confident that we may try to drift up there. Okay, so where do we go tomorrow? Well, it's a problem for the bears. Who's going to sell on it? Who's going to be eager to sell on a stop below this bar? Probably not many traders. And therefore, there's probably buyers in the bottom third of today's bar. And there might be sellers above today's high. But overall, I think we're going to start to transition into a trading range. We have an open gap, the low of Thursday and the high of today. I suspect we'll probably close it, but we'll see. All right. Thanks, everybody. And I will talk to everybody later on.